Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager and Education Coach here at Schwab, and this is Advanced Charting Techniques. And today we're going back to what's proven to be a really popular indicator. I've done a webcast on this indicator in the last 6 months or so. Ben Watson, who's joining us in the chats, has also done a webcast on this indicator. It's only found here on thinkorswim, and it's called the Market Forecast Tool. Now, last time we talked about how it might generate sort of intermediate to longer term signals. Today, we're going to be talking about how to use thinkorswim's Market Forecast Indicator to generate shorter term trade signals for trading swing trades. So it should be a really good discussion. Before we can get to that, though, let me first of all say hello to everybody that's out there in YouTube. Hello there, Villager. Hi there, Speak Truth and Krishna, Ocean Life, Sharon, Scott, Life in the Fast Lane, everybody else. Thanks for joining me week after week. I really do appreciate your attendance and your contributions in this webcast series. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, enjoy the presentation, but be aware that you're invited to join us in the live discussion. This is a Friday webcast series, and it kicks off promptly 1 o'clock Eastern. We'd love to have you here in the live audience. And as I mentioned, my very good friend Ben Watson, fabulous presenter, a wealth of knowledge on this topic and others relating to trading and investing. Ben's hanging out in the chat there with the live stream audience. He's going to be answering any questions that I can't get to just during the natural flow of the presentation. Thanks for having my back there, Ben. And Ben and I would like to issue an invitation to you, whether you're watching live or you're watching on the archive. A great resource between these live streams is to follow your favorite webcast presenters on X. You can find Ben on X at Ben Watson CS. You can find me there at Cameron May CS. All right, but let's get right into this. Hey, everybody checking in. Hi there, Will and T-Chad or Chad, or however that's pronounced. Sonia and Tiny, Will, Art. Thanks for joining us. But first thing that we always have to do, of course, is to pause to consider the risks associated with trading or investing. These risks are real. These disclosures are important. So bear this information in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. There is no guarantee that execution on a stop order will be at or near the stop price. Schwab does not recommend the use of technical analysis as sole means of investment research. And any investment decision you make in your self-directed account is solely your responsibility. Hey there, Will. Hello. All right, but let's go right to the thinkorswim desktop platform, and we're going to be using this indicator called the Market Forecast Tool. And if you've been out there looking onto the platforms trying to find it, maybe you have some other that you're using, you're not going to find it. This is a thinkorswim exclusive. It is a proprietary tool to the thinkorswim charts. But I do want to ask my live audience right now, chat in. Let me know, are you familiar with the Market Forecast Tool or not? I'm not going to spend a lot of time on its construction. I will be spending the bulk of the time on the potential application for, yes, we'll revisit the usage of it for intermediate or longer term signals, but then we're going to kind of speed the thing up, get a little bit, I don't know if you'd call it more advanced. It's a different approach to using the tool, but use it to set up some maybe swing trade entries. So JW, no, and Jerry, no. Bill says not really. Okay. All right, Michael, getting a lot of no's out there. Life in the Fast Lane says yes. Okay, let's make sure that everybody's at least familiar with the basic construction of it. So what I wanted to do today, let's learn about our indicator. We're going to kind of talk about how it's constructed, then spend the bulk of our time on how it might be used, and then we're going to plan and maybe even place a trade using this indicator today. So let's add the indicator right up here as we go up to our Edit Studies icon. It's called the Market Forecast Indicator. Quite a name. Can it forecast the market? We'll see. But I'm going to choose that in alphabetical order from our list of available studies here. Let's add that to our chart. And I'm going to click Apply. And what you will notice with this indicator is that there's a lot going on. It's a very busy looking indicator. However, the interpretation of it's a little bit more straightforward than might on the surface appear to be the case. But it really is constructed of 3 lines. You'll see that there's a red line that's known as a momentum line. The blue line is known as the near-term line, and then the green line is the intermediate line. If you want to know the labels, there you have them. So momentum, near term, intermediate. I'm probably just going to refer to them through the rest of this presentation as red, blue, and green because it's just easier. Not quite such a mouthful, and it's not quite as difficult for someone watching to follow along. But really what these are, and maybe it's easiest to look at them individually. So I'm going to go up here. We're going to get some repetition with customizing indicators for just a second. I'm going to go up to the little flask icon. Here's our market forecast tool. And as we click on the gear icon, which allows us to customize it, you can see there it is, momentum, near term, and intermediate. Well, I'm just going to remove the near term and intermediate from the chart for just a moment. So I'm going to uncheck the box that says show plot, which just means draw the line on the chart. Intermediate, I'm going to uncheck the box for show plot, click OK, click apply, and that just leaves us with the red momentum line. And really what this is, if you're familiar with a stochastic indicator, it's just a short-term stochastic indicator moving up and down, oscillating from highs and lows over quite a short period of time. You can imagine if a trader is looking at maybe, let's say we have a swing trader who's trying to implement this to identify potential lows and potential highs on a chart. Well, this thing has a tendency to race up and back over the course of maybe a day, maybe two if it's dragging its heels. So this momentum indicator, short-term stochastic, can flash up and down from highs to lows very quickly, makes it a little bit too fast for a number of traders to really use on its own in isolation. It's not really intended to be used that way. But if you wanted to take a little peek under the hood and know what it is a short-term stochastic. But the basic interpretation here is it does move from highs to lows, and much like other oscillating indicators, a trader might be looking for oversold conditions when it's reaching those extreme lows, or overbought conditions as it's reaching those extreme highs. This is a range-bound oscillator. All three of them are. Can't go below 0, can't go above 100. So that's the that's the momentum line. Let's add on or add back as we go back up to our studies icon. Let's add the near-term line back in. So I'm going to check the box for show plot, click OK, click apply. So this is another stochastic oscillator slowed down a bit, and conceptually, the way that some people think about this is they may use the momentum to try to gauge sort of a short-term sentiment of traders maybe that are more kind of a very short-term, maybe single session traders. All right. As we apply the near-term blue line, this might be an attempt to gauge the changing sentiments and price that might reflect what the swing traders are feeling. Now, obviously, no indicator has a perfect insight into any individual trader. But the blue line, you can see, also oscillating between 0 and 100, also range-bound. But when it's down below 20, some see that as an oversold condition. When it's up above 80, some see that as an overbought condition, much like the red momentum line. But the blue line is much slower, not much, but it's slower. You can see that going from highs to lows, in this case, our blue near-term line actually took a couple of weeks, whereas the red momentum line was back down to the lows within a few days. So we have a couple of stochastic oscillators back and forth. What do you suppose the green line is? Yep, it is yet still a slower stochastic, not a true slow stochastic, but a slower stochastic. So I'm going to pop up here. Let's add that back onto our chart. Go to our intermediate line. Let's show that on the plot. Click OK, click apply. So there's our third line. And this one is the slowest of the three. Still oscillating between extremes, still oscillating between 0 and 100, still oscillating between oversold and overbought conditions. But all three of these, that's the basic construction. We have three oscillating stochastic indicators, but it's actually the interplay of the three that for users of the market forecast tool can conceptually be important. And for some, they might see this green line as sort of what maybe the swing to intermediate trend trading traders might see technically. But in any case, it's the combination of all three that can be interesting. So what we've discussed in the past is that when all three of our lines, short term, representing those very quick traders, near term, which is more of a swing trade, and the green line, our intermediate line, when all three of those are bottoming out at the same time, we have a name for that. So for those of you who said yes to being familiar with this indicator to some extent, what might we call this when all three lines fall below 20 at the same time? And I'm going to keep an eye on the chats. At the same time I'm going to do that, I'm going to give my audience here a little visual reference point. I'm going to choose the horizontal line tool here, and let's draw a horizontal line right at what we might call that oversold range, which is going to be right at 20. That's going to be about right here. There we go. What this allows a trader to do, and we don't have to do this. It's not necessary. It's not what I do when I use this indicator. But yeah, Villager, you could call this oversold. Art says buy, buy, buy. Kevin with a question mark gives the answer I was looking for. Kevin calls this a cluster. It's exactly right, Villager. Yeah, it's known as a cluster when we have all three of these lines ducked down into the oversold range, or in other words, they're all clustering down at the bottom end of the range at the same time. And you might notice it doesn't happen very often. But what's the significance to a trader here? Well, if we have, again, this is just conceptual. It's not an insight into the way that any individual trader looks at things. But if we have short-term bearishness, very, very short-term, meaning over just a few days, carrying an indicator down to an extreme low, we have sort of swing momentum has dipped down to an extreme low, and we have intermediate momentum that has swung down to an apparent low, an oversold condition. To a technical trader, they might think, well, if everything is down, maybe there's nowhere to go but up. Now, obviously, that's not a guarantee that things can't go down further, but the implication here for a trader is that maybe price has come down long enough and far enough that it might be reaching a potentially important reversal point. Yeah, Dan, Dan, that's actually a more complete answer to what we might call this. This is known as a bull or bullish cluster. For obvious reasons, the implication for the trader is that price might be hitting a low and it may be set to rise. So just to recap, the definition of a bullish cluster is all three lines being below 20 on exactly the same day. So let's see how many times that's happened over the last 12 months. A quick way, because there's so much busyness on this indicator, a quick way to sort of train one's eyes to look for these clusters actually is to pop up here to our flask icon, and I'm going to make our green intermediate line thicker. So we have a width from a range of 1 to 5. Right now it's just set to a thickness of 1 out of 5. Let's set that green line to a thickness of 3 out of 5. It's going to make it pop on the chart, make it more obvious. So when we look at this, if our green line is up at the top, it's the slowest. What do we know we are not getting when the green line is up here? There is not a bullish cluster. What we need to see is for that green line to go down and to potentially then join our blue and our red lines if they happen to come down below 20 at the same time. Beth Larson says, can we scan for a cluster? I think it would require a script, Beth. That's a good question. It would have to be a custom script. But I think especially if one is using this sort of a technique where we highlight that the green intermediate line, it's pretty quick just to flip through your charts and see if we're getting a cluster or not. But yeah, as I look over the last 12 months, there was a near miss right here. But really, the only time that we had a true cluster was right there on the 19th of April. Now, another way to confirm whether we have a cluster or not is to pay attention to the numbers right up here in the upper left of the indicator. So it says market forecast. There's the current red value. There's the current blue value. And there's the current green value. And as we move over each individual day, it's updating those values. Now, I know because our green line is up here, or at least it's not below 20, there's no way we have a cluster. When it gets down below 20, that's when our cluster traders, they're eyebrow might rise, their ears perk up for some reason, even though they're not listening for something. Anyway, yeah, right there, we get all three. Look at, not only can we see that visually, but I think possibly more importantly, we can see numerically a confirmation of a cluster. You can look up there in the upper left and we see that the red line's at 5.5, the blue line's at 10.5, and the green line is at 10.1. So definitely a cluster. Now the cluster itself is actually not necessarily a signal for action. It's interesting here that the cluster happened. When did we first cluster on this? Let me see. Yeah, it was actually on the 18th when we first got all three below 20 on the same day. So the 18th, I'm going to highlight this to emphasize it. It was actually this little red candle right there. You see that one right there? That's the day the cluster appeared. But a common action trigger or an action signal for a bullish cluster is when the red momentum line rises back up above the 20. So we get all three of them down below, and then the quickest one flips around, and when it starts to travel back up, that might be the earliest indication that price momentum has started to shift back up, and our trader may take action there. And that looks like that happened on the 22nd. So the true signal here, let me remove this drawing, the 22nd, where we had A, gotten the cluster, and then B, saw the red momentum line rise up above 20, was right here on April 22nd. And as I point at that, you can see what the value of that red momentum line was by looking at the red value right there. It was, 45. Randy says, is this used primarily for indices or for stocks? And actually, Randy, traders can use it conceptually for both. There are some who might look to see if, for example, a really dedicated cluster trader might look at this and say, whoa, the S&P is giving a cluster, and therefore there might be a lot of stocks out there that are set to rise. And then they may carry that over and go look for signals. If they're trading the market forecast, look for signals on the individual stocks. What I will say, though, is that because clusters are so relatively rare, it might also be pretty uncommon for an individual stock to happen to be giving a signal on exactly the same day. That's why I'm going to be talking about a bit of a different signal that a trader might look for. But before we move on to that, I did want to talk about how if we were to look at this on, let's say, a longer term chart, let's switch our time frame here to a 3-year chart. And I've highlighted here just the days where we actually got real clusters. You can see the days when they're not clusters, when the green is well above 20. Let me right click on our drawing over here, and let's extend that off to the left so you can see where that 20 is. But you can see right here there was a cluster. What day was that? That was about, let me hover over that, right here on the 21st of January, back there in 2022. And then I think we saw our market forecast, it popped up the next day. So the signal was right here on this white candle day. Nice little run up right there, not a huge one. And at the time, actually, the market was pulling back, so that's not surprising. Here we had another one right about there. And then I think we had the red, popping out. If it's helpful for a visual reference, there was a signal here. There was a signal there. There was a signal right. Let's get the actual signal day. The actual signal day came on the 21st of June. That looks like that was right here. Realize it's going to take a little bit of squinting, but you can see for the most part, this indicator has been doing a fairly nice job of identifying near-term lows. And it looks like there was another signal right in this little cluster of candles and another one right around here. Okay, this one, not a great signal, turns out in hindsight, but the rest, not too bad. But then there was a stretch of time all the way till about here where there was just not even a cluster. So clusters, while for some traders they see them as potentially powerful signals, They don't always work, and there can be long stretches in between them. Now, there are a couple of customizations that might be made if a trader is okay with looking for, at least conceptually again here, a little bit lower quality signal, but maybe something that's a little bit more frequent. One potential customization is to not require that all three be below 20, but look for all three to be down below 20. But okay, maybe if one's between 20 and 25. So for example, let's see, I think there was one of those sorts of scenarios right here. Is that right? Nope, this one never quite got there. Oh yeah, there it is. All right, let's go back to a yearly chart so you can see what I'm talking about. Let's go back to a 1-year chart. You can see right there, a trader might be going, whoa, okay, our green line is down below 20. There's definitely the possibility here we might get a cluster soon. But as I move along here, right there, I'm going to pause my cursor. What are the values of the red, the blue, and the green lines right there? We have the red line at 15. We have the blue line at 16. We have the green line at 21, a hard line market forecast user who requires that all three be below 20 on the same day. That is not a cluster. For others, though, they might say, you know what, that's a near miss, but it's close enough. 2 of them are below 20, and the other one's between 20 and 25. That is a near miss. And so they might say, good enough right there is a near miss cluster. Did I get my, yeah, that's good. I got that in the right spot. And then when did our red line move back up and generate a signal? It actually generated a signal right here as a potential entry. So, oh, yeah, Kevin, what if somebody has an interest? It sounds like there was another presentation where they covered a potential scan on this. If you want to go look at that, one thing that's an interesting way to find other webcasts, if you have an interest in a specific indicator, is to just type in a search right here on our, as a matter of fact, I don't even need to type in market. We can just type in forecast. But we can just type in a keyword search here on our Trader Talks Schwab Coaching webcast channel. Okay. And it's going to come up with previous webcasts. For example, here's Ben. Thanks for helping out in the chat, Ben, and also thanks for doing a webcast on the market forecast recently. There you go. So let's go back to our chart. We've talked about one customization here. This next one, a little bit more dramatic, but we're going to be using this indicator in a much faster way for the rest of the discussion. And we're going to do that by removing the slowest element. I'm going to go up here to our little flask icon, go to our market forecast tool, and I'm going to take the intermediate entirely out of the equation. For some traders, this is a potential way to speed the whole process up. So let me get rid of these drawings here. Matter of fact, let's just clear off the whole drawing set. There we go. And I'm just going to pop in my reference line again, right at 20. Or as close to 20 as we can get it. It's just there for visual reference purposes. Not really necessary if one knows how to use the indicator, but when you're teaching an audience about how to use the indicator, it can be helpful to have that little line there. In any case, I'm going to be looking for now, instead of looking for clusters generated by 3 lines, I'm going to use something that you might call maybe a mini cluster, which only looks for the 2 lines. This is a shorter term indicator. Does not require the cooperation of the longer term one, but this is basically if we see the red and the blue line clustering below 20, and then we get a rally up out of the oversold area by that red momentum line, that becomes the signal. So in this case, let's look at how many signals this is now generating. Now, frequencies of signals, an increased frequency does not necessarily mean it's an increase in quality of signal, nor does it necessarily mean that we're getting a degradation of the quality of the signal. What it might mean is that the trader might plan to be getting in and out of trades faster, though. All right, but right here, you can see we have a cluster. Right here, we have a cluster. Right here, and actually in fairly rapid succession, I suspect that one of these is going to turn out to be what we call a whipsaw. Right there's a cluster. Is this one a cluster? Yep. There. And do we get a cluster there? We did. Right here. So you can see how much this has sped things up. This is the same index we've been learning this whole process with. And where the index had only produced one cluster before, you can see that it is producing multiple mini clusters. Beauty says, is this indicator any different from MACD? It is in a significant way, yes. Now, MACD, stochastic, RSI, CCI, and the market forecast, which is actually a combination of three stochastic indicators, they're all generically in the category of what we call oscillating indicators, all generically in a category of what we might call momentum indicators. So they're going to share some similarities, but there are significant differences in the way in the ways in which they're constructed, and also the ways the speed at which they generate entry signals and exit signals. But it's a good question. There are similarities there, Beauty at its best, but they're not exactly the same. Nope. All right, but let's just have a look. When did this last generate a signal here on SPX? So if let's say our trader is just trying to find a short-term bottom on the S&P 500. Maybe they want to know, well, do I want to take my new trades on Wednesday or on Friday? Should I wait till next Tuesday? If they're using this indicator, they might wait for our two lines to fall below 20. And when the faster of the two, the red momentum line, rises back up above 20, that could say, all right, time for action. Is it a guarantee that the action is going to be profitable? Of course, it's not a guarantee. But right there, I'm going to zoom in so we can see this a little bit more closely. We got our cluster. Actually, we've got a cluster right back here, and then we did not see an emergence of the red line until right there. So it looks like our signal was generated right here. Yeah. And if we were to roll that back, let's look at the one before that. We clustered, we're below 20, below 20, below 20, below 20. Our red pops up above 20. The next candle is right there. And you can see on the S&P 500, at least on these two examples, if we go back here, here's an example where it wasn't as high quality a signal in hindsight. It could definitely be the case that, no indicator is perfect. So we got to be prepared for that. But if a trader is just trying to make refinements to, which day of the week they may be taking their entries, this might assist with that effort. Never a guarantee on a trade-by-trade basis. But that is a common customization. Okay, RG is asking an excellent question. So when do we exit? So what we need to do here, RG, is kind of transition from this being more of a market bottom timing signal, either for an intermediate term or for a short term. So using 3 is more of an intermediate term low signal. Using 2 is more of a short term low signal. And of course, in any case, 3 or 2, they can individually fail. That's definitely the scenario. So RG, we need to plan for if a trade works and also if a trade fails. So how about we go to an example stock? I want to look at Tesla for right now, because it happens to be, if we were to draw a line here at 20, let's slap this on here, right about there. I'm not using my horizontal line tool, but that's okay. Just the normal trend line tool will work for now. But look at what just happened today on Tesla. We had both of our lines dip below 20. Our red momentum line has now risen back up. There may be a signal here that in the short term, prices have come down sufficiently to drag both of those prices down into the oversold, both of those indicators down into the oversold territory. But the faster one is starting to say, hey, maybe a reversal is underway. So this looks like it could be an entry signal right now, today. So this could work, or it might fail. Ramesh says, is news somewhere saying I saw a correction as expected? Ramesh, I would have to say almost every day of the week, there's somebody out there forecasting one direction or the other, right? Yeah, so an individual trader using an individual technique has to decide for themselves whether they're going to be paying attention to news on top of their own individual approach. So Lil C says, what indicator am I using, please? This was known as market forecast, only available on thinkorswim charts, okay? But market forecast, you can see the name right there in the lower left. So where might a trader take profits? Well, this is a short-term application of this indicator, so making plans for short-term targets and short-term stops is commonly associated with this approach. So where might a short-term target be? Well, with this indicator, our oscillators going down is almost always attended by price coming down. So a target may become just getting back up to the most recent price high. So in this case, that might be up there 359-ish, maybe 360. I'm just going to round it off for simplicity's sake. Let's say that our target here is 360 if this signal turns out to be a quality one. Well, it's also possible the signal may fail. So where might we take our losses? Well, since this is such a short-term signal, the trader might just look at the lowest price since the cluster started. Now, in this case, that happens to be today's low, but it's not always the same day's low. But the lowest price since the cluster started, maybe give it a percentage point, maybe $1, but a comparatively tight stop below that low. So in this case, what's the low? 309.22. Maybe our trader is putting their stop at, let's say, 306, which would be just about 1% below that low. And that might become the trade plan. So from here, how would we put this into practice? Well, let's go buy some shares of Tesla and put on a target exit and a stop exit. So I'm going to come here to our trade tab, make sure that we're looking at Tesla. I'm going to right click on the ask price. So it would actually also work with the bid price. But I'm going to put in a custom buy order with what's known as an OCO bracket. One cancels other. That's referring to the two sell orders we're going to be placing. One to hopefully take profits, one to take losses if necessary. Lil C, so it sounds like you may have arrived late. You may want to go check out the archive for this session just to get caught up. But in summary, we're looking at 3 stochastic oscillators that we've now narrowed those down to 2 stochastic oscillators, but that carry the title of market forecast on thinkorswim. So I'm going to choose buy custom with OCO bracket. And how many shares do we want to buy? 100 shares would be $32,000. How about if we buy, for our example trade today, let's buy 30 shares. Make it about a $10,000 investment. Let's link the buy order with the sell orders by clicking on the little broken chain link here. And then as we move on with our order, you can see those quantities have just automatically been tailored to match the buy order. But for our buy, we're trading around $318. I'm actually going to switch this to a market order for today's exercise, and I'm going to route this into our example IRA account. Now, when we select a market order, that means the trader is willing to just pay whatever the market price is when their order gets to the front of the line. So there's not a guarantee that we're going to be paying exactly this price. But our stop was up there, as I recall, it was up there at 360, wasn't it? 360. That's going to be our limit sell order, meaning we want to sell for that price or better. 360 is the lowest price we want. That's our limit. Now, on the opposite side of the coin, we're going to put our stop down there 3% below our recent low. Pardon me, 1% below our recent low. In this case, that would be 306. Let's make sure that's a good till cancel order. Now, this 1% rule is just an example rule. Not every trader who uses this indicator uses exactly 1%. Can't even say that every trader uses a stop. But just as an example, a relatively tight stop when we have a relatively quick signal, that's pretty common. In any case, there's our trade. Buying 30 shares at the market price Going to sell those if we can get up 360, or if it drops down to or below 306, it'll trigger a stop order. Let's click confirm and send. Buying 30 shares of Tesla at the market, selling those shares at our 360 limit, or selling those shares at a 306 stop. Both of those sellers triggered by order number 1. Down at the bottom, there are some important reminders here. There are no commissions on this trade, but there can be on some types of trades. But our reminders here are, with market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. We're not guaranteed we're paying around 318. Matter of fact, it's already gone from 318 and pennies. Now we're up to like 318.70. It's climbing. So yeah, our price could be higher. With stop orders, there's no guarantee that the execution price, or the price we ultimately receive if we're stopped, will be equal to or near the activation price of 306 in this case. So let's send that order off. And should see a quick fill on that. Is a market order. Yep, that's working. There it is, filled at 318.75. So it looks like we have about $41 up to our target, maybe about $12 of theoretical risk down to our stop. Obviously could be more than that if the stock is moving rapidly. So that's interesting, but Wayne says, you like taking out that intermediate line? Yeah, it's one customization that can be pretty readily made. If you need to see how that's done again, you just pop up here after you've entered your study, after you've added it to your chart, just click on the little gear, go to intermediate, and uncheck the box for show plot. And that just takes that green line off. It doesn't mean that I'm trying to dismiss the potential validity of the 3-line signal. It just means that that signal is relatively uncommon. I would guess we probably haven't had very many of those on Tesla at all this whole year. But for some traders, though, you'll notice here's a possible issue with using any indicator all by itself. There are times when our stock has been going down, and attempting to trade bullishly in a persistent downward trend can be tough to do. So yes, for some traders, they will apply a trend filter. So even if we signal, like for example, there was a cluster right here saying, hey, Cameron, might be time to get in right there. Oops, never mind. It didn't really work out all that well. And then there's a cluster right here. Cameron, might be time to get in. Oops, never mind. It didn't work out very well. Yeah, this is among so many other different oscillating indicators, one that's commonly paired with a trend indicator as a sort of filter for when do we even start looking for entries. And, one common pairing might be a moving average. This is a pretty quick indicator, so maybe we might want to use the quicker of the common moving averages. So, for example, instead of using a simple moving average, maybe the trader uses an exponential moving average. So how about we use an exponential? Let's add that to our chart. And we're just going to look for sort of longer-ish term, maybe intermediate to longer term changes in trend and trading in the direction of that trend. How about we look at maybe a 100 period exponential moving average? I'm going to click OK, click Apply, click OK again. But in any case, whichever moving average is being used, what the trader might do is when that moving average is going down, they're not even looking at their indicator. As the moving average starts to rise, maybe they might see that as a more cooperative trend for bullish trading. And in that case, maybe they're looking for a quote unquote more optimized entries within that trend. So here we have a rising indicator, or a rising moving average. And was there a signal? Yeah, there was a signal right there. This one, a bit of a whipsaw signal. See that signal right there? The next one, that one turned out to be of higher quality. This one, not a bad signal. This one right here, not bad. Took a little while for this one to develop, but it happened before these runs. Den says, aren't the averages built into market forecast data already? Well, Den, they're stochastic indicators. So no, our 100 period moving average would be a much longer technical view of the chart than the signals being generated from our stochastic oscillators here. Beauty at its best says, is exponential moving average more sensitive to price than a simple moving average? It is. Yep. Now, I'll say it's more sensitive to an extent. With very short-term simple versus exponential, there tends to be a pretty nominal difference. When we get into longer-term moving averages like the 100 or the 200, the distinction between the two tends to be a little bit larger. But with both, the degree of sensitivity, it's not typically enormous. But yes, the exponential moving average weights more recent price movement more heavily than the simple moving average does. So yeah, it tends to be more sensitive. But everybody, we've actually accomplished what I set out to do today. I wanted to go back and revisit this, what is kind of a familiar indicator to some in my audience, but I wanted to look at it through a different lens. Speed this thing up. How can we do that? For some traders, it might be as simple as taking off the intermediate line and just looking for a cluster of 2 rather than 3 oscillators. So I hope you found that helpful. I always enjoy these webcasts. Fridays are fun. I also have webcasts pretty much every other day of the week. So if you want to join me in my other series, you're certainly invited to do that. Ben, thanks for helping out in chats. As we turn all these good people off into their weekend, Ben, let's give them a quick reminder. Guys, if you're not following Ben and me on X, you're missing out on one of our educational resources. It doesn't cost anything to follow us, but you can follow Ben there at Ben Watson CS. You can find me on X at Cameron May CS. But it's the best place to connect with us in between these live streams. And I'm only live streaming maybe 4 or 5 hours a week, something like that. The rest of the time, this is the best place to find me or my thoughts. In addition to this, make sure that you're subscribed to our Trader Talks channel. You can go down right now, click on that subscribe button. It doesn't cost anything. It only takes a second. It only takes a click. But when you're subscribed to the channel, what I like to say is our Trader Talks channel is just the best place to come and find our previous webcasts organized very neatly into playlists according to the webcast series. So you can zero in on a topic that's important to you and find a whole bunch of webcasts to learn from. But of course, you can also join our live sessions right there. Will, you're certainly welcome. Speak Truth says, Cam, do these concepts inverse translate to bear market and trading? That's a good question. Can the market forecast tool conceptually be used for bearish trading as well as bullish? Yes, but I would put a caution on that. In a persistently bullish market, the market forecast tool, like so many other technical indicators, can generate lots and lots of unproductive whipsaw signals. So a trader needs to be probably extra cautious because bearish moves can be so quick. We'll see. Say your sound keeps cutting out. I haven't seen anybody else complain about that. But yeah, let me know if there are any sound issues. But what I was about to say, in my experience, for what it's worth, it's a limited data set. It's not conclusive. But this is one of those indicators that kind of struggles looking for bearish signals. All right, everybody. Thanks for joining me. Go enjoy your weekend. Ben, thanks for helping out. Thank you to everyone who's already given a thumbs up or liked this webcast. There's already 49 people that have clicked the like button. That's basically a third of everybody watching right now, which is awesome. If you would just do me this favor, every time you enjoy a webcast, before you go, just click the like button. It only takes a second. It doesn't cost anything. It is loud applause to your presenter, and it gives their webcast a boost in the YouTube algorithm that's definitely appreciated. All right. Kevin says sound is a little choppy. All right, I'll check that out. So everybody, thanks a lot. I will see you in a future webcast. I'll also look for you on X, but whenever I see you again, until that moment arrives, I wish you the very best of luck. Happy trading. Bye-bye.